Welcome. In this video, Xcn coin price is changing trend. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart shows that a very positive and promising technical pattern is currently forming in the market. Especially for traders who are familiar with classical pattern analysis, this structure has the potential to be a very reliable bullish signal. Currently, price action is in the process of forming a bull and handle pattern, which is a common pattern in the world of technical analysis and is considered to have a very high success rate. This pattern usually represents a period of consolidation, followed by a rebound from prolonged declines. In the current situation, the price is in the process of forming the second phase of the pattern, the handle. This indicates that the pattern is very close to completion, and a strong upside move is on the verge. The first part of the bull pattern, the bull part, indicates that the market is recovering from a long decline and entering a sideways and then upward trending pattern. This process usually takes time and creates opportunities for patient traders. The price gradually recovers, buyers gain strength, and the market prepares to leave the previous decline behind. Psychologically, this bull represents a period of renewed investor confidence and reduced market uncertainty. Now, the handle pattern that follows this structure has started to form. The handle is the final stage of the bull pattern and usually consists of a short-term pullback or a period of sideways movement. However, this pullback is never a negative signal. On the contrary, this part is considered a harbinger of a new wave of buying. This is because during the handle phase, the price pulls back a bit and consolidates on lower volume. Investors review their positions, and the ground is prepared for a healthier rise in the market. Currently, the price is positioned exactly at this stage, indicating that the countdown for a strong upside move has begun. The pattern is technically complete when the handle is completed and the price manages to break through the top of the pattern. After that, the target of the pattern is calculated. Usually, the vertical distance from the deepest point of the bull to the peak is measured, and this distance is added upwards when the breakout occurs to estimate the price target. In the current situation, as the price is trying to complete the handle structure, when the breakout occurs, there will be a technical upside potential equal to the depth of the bull. This means a very attractive target zone for traders. One of the biggest advantages of this pattern is that it has a high technical reliability, and the risk-return ratio is in favor of investors. Since the handle usually moves in a narrow range, the stop-loss level can be clearly defined. At the same time, the upside target at the time of the breakout makes it easier to trade strategically. In other words, traders can use this pattern to limit their risks and maximize their gains. Another noteworthy element is the volume. The volume usually decreases in the bull, decreases as it approaches the bottom, and increases slightly on the upward reversal. However, the main volume increase occurs during the breakout after the completion of the handle. This tells us the following. Traders have been following this pattern closely, and at the point of its completion, they enter the market with a strong buying bias. Therefore, the increase in volume as soon as the handle is completed will be an important criterion that directly determines the strength of the uptrend. At this stage, it is extremely healthy for investors to act patiently while the price forms the handle, because this horizontal or slightly bearish consolidation ensures that the balance of power in the market remains intact. This process contributes to the elimination of short-term weak hands, the clarification of positions by strong traders, and a more solid structure for the upside. But we can't decide the analysis only with the pattern. Let's look at other metrics. Stay tuned. From a technical analysis perspective, one of the most notable formations in the market structure at the moment is the wave structure that has developed within the framework of the Elliott wave theory. Elliott's theory suggests that markets move within certain rules and rhythmic structures, and that there are certain psychological cycles behind each price movement. The basis of this theory is a 5-wave main structure, which generates highly effective signals for both short-term and long-term market movements. Analyzing the chart, we can see that the price is currently in the process of the second wave. This second wave is usually a correction following the first wave, and is considered a period when investors go for profit realization after the sudden rise in the first wave. However, the existence of the second wave does not mean that the uptrend is over. On the contrary, it is a prelude to the actual uptrend. This wave is a period when the market gathers strength, weak hands are eliminated, and strong traders take new positions. Therefore, being patient in the second wave and analyzing the rhythm of the market correctly can be a great advantage for investors. Perhaps the most exciting part of the Elliott wave theory is the third wave, because this wave is usually the strongest, the most violent, and the longest lasting. Technically, this is a period when traders are now fully invested in the market and the number of participants and volume increases dramatically. At the same time, during this wave, there is a general euphoria of bullishness in the market. This second wave period that we are currently in could be a sign that we are on the verge of this powerful third wave, and that a breakthrough is just around the corner. According to Elliott theory, when the third wave begins, certain targets can be technically calculated based on Fibonacci ratios. The ratio considered as the minimum is the 1/618 level. This means that a move of about 1/618 times the length of the first wave could occur in the third wave. However, when market momentum and investor interest are strong enough, this target is only a starting point, and higher levels become possible. In particular, further expansions, such as 272, are often targeted in strong bullish conditions. In the current structure, the probability of reaching these ratios seems quite strong if the price transitions into the third wave. The bounce potential of the third wave following the second wave has a strong impact not only technically but also psychologically, because the second wave often creates hesitation in the market and investors try to figure out whether they are still in a correction. But once the third wave begins, this uncertainty is completely removed and the direction becomes clear. The rises experienced in this wave have the effect of mobilizing even late market participants and spreading bullish confidence across the entire investor base. It is worth noting that the current second wave process is taking place in a very healthy and patterned structure. This is an important clue that the beginning of the third wave will be much stronger. In other words, the market is stretched like a spring right now, and when this tension is resolved by an upward movement, there could be a very sharp bounce. That's why in technical analysis, such pullbacks are not seen as a negative, but as a prelude to the next big move. Due to the nature of the Elliott wave theory, during the third wave, prices surpass previous highs, new resistance levels are tested, and are often interpreted as the start of new uptrends on major timeframes. So while the second wave process may seem like a test of patience, there is a very satisfying upside potential at the end of it, especially when the price breaks certain technical levels, confirming the start of the third wave and accelerating the movement towards the Fibonacci targets. In a deep dive into the technical outlook of the market, it's clear that the MACD, Moving Average Convergence Divergence Indicator, one of the most important indicators we're currently keeping an eye on, is approaching a critical stage. MACD is a powerful and reliable tool that many traders and technical analysts use extensively to track trend reversals, momentum shifts, and trading signals in the markets. This indicator is used not only in relation to price movements, but also as a reflection of psychological trends. A close look at the movement of the MACD lines at the moment shows that they are gradually creeping below the zero level. Although this kind of movement may be perceived as negative at first glance, in technical analysis, this situation should be evaluated from a broader perspective from different angles. Because when MACD lines move below the zero level, it often indicates that the market is about to complete its correction and is approaching a new phase of momentum. In this context, this region below zero is actually often a bottom-forming process and should be carefully monitored. We should wait for the MACD crossover. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.